Hey guys, Casey here. Welcome back to another episode of Lions Den Investments and Reviews. In today's video, I wanted to talk about Ethereum and do some technical analysis on that, and then show you why uh, I'm so bullish on it and why markets right now are projecting that Ethereum could go much, much higher. And then I also want to cover in today's article what they were talking about yesterday with the Federal Reserve's uh, Federal Open uh, Meeting Committee, basically the FOMC, and what they did is they went over interest rates, the overall outlook of the economy right now, and where we're headed. So let's just start off with that because there's the Fed Reserve, you got to understand their main objective is to create debt. Okay, their product is debt. That's it, and it's no wonder why our economy, our overall national deficit, is to the tunes of close to $30 trillion now. Is it sustainable? Absolutely not. Don't let these guys fool you. Um, Fed Chairman Jerome Powell here was asked uh, his views on the potential for asset bubbles in the stock and housing market due to easy Fed policy at the Fed's post-meeting briefing Wednesday. And Powell indicated that the Fed's monitoring of asset prices and other financial measures does not show any issues with financial stability. I have to laugh at that because it's like, are you kidding me, dude? Are you kidding me? Like, if you want somebody who's going to lie to you straight to your face, this is the guy to do it. I mean, he is an expert at this, and a lot of people don't understand financial lingo, okay, the terminology that they use. But basically, in a nutshell, what he said yesterday was that they're going to suppress interest rates, keep them at zero. Their little 2% inflation target that they always have, okay, guys, don't think anything of it, okay? It's just a made up number. They can't control inflation. They want you to believe that they can. And when I say inflation, I'm talking about prices rising due to all the stimulus money that they're printing up out of thin air. The product of debt that they create, okay, that's what will cause inflation. And normally it doesn't rear its ugly face until you start having economic conditions that go against a normal economy, kind of like what we have right now. Not to mention you have political upheaval. Those two things combined are what cause inflation and prices to rise due to the uncertainty. And they don't have any control over that. They want you to believe they do. Okay, so don't be fooled by that. But basically, I digress. What he said is going moving forward. They don't expect those inflation rates to hit 2% until like 2023. Not to mention, they are doing a asset buyback program. Okay, this article says 80 billion is what they're talking about, but he said 120 billion a month, and it's going into buying up short-term treasuries. Now, yeah, you got to ask yourself real quick, what is a bond? A bond is debt. It's corporate debt. It is money that they offer over to other corporations so they can grow and expand their business. And at 0% interest rates, it entices companies to go borrow. Okay? Normally, this is what stimulates an economy, but you got an economy that's shut down. So, how does that make sense when it comes to economic growth? And that's exactly what they're saying here. He says they're solely focused on the virus and they don't care what the side effects are of what they're currently doing, buying 80 billion in short-term treasuries, okay? 80 billion. The entire buyback program is 120 billion a month, and they don't plan on cutting that off anytime soon until they get this whole market downward spiral which is taking place, and velocity of money, meaning consumers spending money out of their own pocket. They have to get that under control first before they can even turn off the stimulus and these buyback programs. Okay, essentially what they're doing is they're bailing out corporate America. Um, but he says buying 80 billion in short-term treasuries. How does that translate to better economic growth? He said. Okay, Powell was so nonchalant about these hikes in home prices. It's just temporary. Tell that to the first-time home buyer who is trying to buy a home and keeps getting outbid. If you follow my channel, guys, you can go back and watch one of the other videos where I was talking. I was talking about I showed you the interview with Grant Cardone, and he basically said new first time home buyers are going to get completely wiped out. Okay, they can't even buy a home. Um, so go back and watch that if you want, because that's just confirmation in regards to what he's saying right there. Um, but the other thing to keep in mind here, guys, as they go forward and they keep printing money and keep printing money, okay, we've got a 1.9 trillion-dollar stimulus on the table right now with Congress, and that's just for COVID relief. If that goes through, plus you take 120 billion a month, right? I just broke out the calculator last night. Let's say we go 12 months of 120 billion a month, okay, or 80 billion. You're to the tunes of 1 to 1.4 trillion extra dollars on top of that 1.9. So within the first quarter, already out of the gate, like I said, they have to print up more money and do double what they did the year prior. Okay, um, so you're already at or exceeding what we did last for the entire year last year in the first quarter coming into 2021. And you're supposed to believe that things are getting better, right? The economy's recovering. It's not. Not the real economy. There is no correlation between the stock market and the real economy. They're both completely separate. And the reason why is because they can pump up the markets all they want with stocks. You know, they can take the Dow to 100,000 points. Now, with the economy, though, you can't control that purchasing power out of your back pocket and entice people to go spend money and hand it back to the rich, who are the people who own these corporations. You can't control that. So, you know, it's like I said, there's about a 6 month lag time, and once the economy wakes up again and realizes, oh crap, their new policies aren't working, all this Fed stimulus money is overvaluating everything in the stock market, you're gonna have a correction. Okay, it's going to come tumbling back down, and I would put that time frame, just my prediction here, okay, because that's all it is, it's a prediction, completely speculative, but based on history, okay, you're looking at probably a time frame of around like late May, June, maybe July at latest, and then the markets fold back over. We go into a free fall at that point, and they can't stop this. Okay, they can't stop. They have to keep printing more money. If they stop, it collapses. Okay, then they have to print up more money and prop it back up. So just keep it propped up. Keep everybody that in their 401ks thinking that they're getting rich, and they are on paper, but in the real world, you know, companies are going to be struggling significantly, and that's why I always say you need to get into anti-debt units. Okay, silver, gold, cryptos. Get out of the U.S. dollar. The U.S. dollar, it's pretty much, you know, like I've explained before, it's just a piece of paper. That's it, with little digits on the note or the bill to track it. It's in a ledger of accounting, right? It's a database where they can just track that stuff. Because all it is at the end of the day is transactions and a belief system that it's actually worth something. You get rid of that, you might as well just transition over into a new system that's digital, much faster, like Ethereum. Okay, and that brings me into Ethereum here. Let's go ahead and do some technical analysis real quick on Ethereum, because there's another article here where they're talking about Ether could be priced at $10,500, says a fund strategist by Cointelegraph. Okay, and guys, he's not lying, because I've been paying attention to some of the developers who've been talking about Ethereum lately, and especially since I'm Ethereum certified as an expert now from the Blockchain Council, I can attest to this. I can tell you for certain, 100%, that what these developers are saying is the truth. Because what the developers are saying is that with Ethereum, it can be used. The technology that's in the underlying asset can be used for more than just monetary use. So the use case can be used in smart contracts for business transactions in everyday life for every single industry across the board. So Ethereum is basically the equivalent if, like, say you were going to invest in the internet before the internet became big. Let me ask you a question real quick. If you had that opportunity again, would you invest in the internet? Hit that like button if you agree with that statement, or if you're going to say yes to that question. Okay, because I know I would. And here you are. You get a chance to do that, and you can do it with Ethereum. Now, the other thing the developers are saying that's really interesting is they're talking about the market cap. okay, of Ethereum overtaking Bitcoin. And the reason for that is because with Ethereum, it creates this entire altcoin industry, right? So you got all these projects that are being implemented. Not all of them, it's probably only about 15% of them. The rest are all garbage. But if you can stick with that top 15% of those projects, you're going to do very well. And if you go with Ethereum, that's just it's pretty much 100% guaranteed it's going to do well because if it overtakes the market cap of Bitcoin, at the current market cap of Bitcoin where it's at right now, you're looking at if that flips to Ethereum, you're looking at a price on Ethereum from the developer's side. Okay, these are developers saying this. From their perspective, it'll put Ethereum's price per token at right around $50,000 a token, and that's if you were to flip the market caps right now, at Bitcoin's current market cap, and then you replaced it with Ethereum. Okay, so that's kind of where these numbers are coming from, and that's why they're saying it could easily hit 10,500. Not to mention the other thing that most people aren't talking about is this decentralized finance space. Okay, so coins like Uniswap, for instance, this created a whole derivatives market for the exchange of tokens on the derivatives market, and that market is like 10 times larger. I don't know the exact size of it, but it's got to be at least 10 times larger than Bitcoin's overall market cap right now. So we're talking like trillions upon trillions of dollars coming in to the decentralized finance. And what does decentralized finance use? It uses Ethereum. Okay? It uses the underlying technology with smart contracts in decentralized finance. So you're going to get a lot of the money coming into Ethereum and then pouring over into decentralized finance. That only strengthens the use case behind Ethereum and what it actually does. So 10,500, before this bull run's over, I think we'll hit 10,500 no problem. But that's Ethereum. Let's just look at some technical analysis real quick because I want to take you through where I think Ethereum's going, like here short term, and then we'll wrap up the video. So right now, we're kind of in a triangle. All right, so we've got this resistance on the top, pushing it down. You got your weekly support coming right up through here. Right now, we're just getting squeezed, guys. Okay, so I'm expecting the price to just kind of bounce back in between here until we can close a daily bar above this downward trend, and that's what I'm looking for. As soon as that happens, all we have to do is break resistance right there at about 1387, and then it's off to the races. And the beautiful thing about this, we've already hit all-time highs right up here at around like 1,470 bucks. So once we break that and we head higher, it's off to the races, guys. I think we'll probably hit easy $2,200 a token. And I would expect that to happen probably sometime in February. Okay, I could be wrong. We could break weekly support here, and if we do, hey, just back up the truck. Who wants to buy Ethereum at lower prices? If you do, go ahead and smack that like button. Also, subscribe to the channel. It helps with the YouTube algorithm. I'd appreciate it greatly. But if we break through and we go lower, we've got a major support line right here. You could probably put it down here if you want at $1,064, but I would say we would hit 1,100. We'd probably bottom out at about 1,100 before we do that. That's if we hit and we go really low on Ethereum. The only other thing that would take Ethereum down right now, guys, in price would be Bitcoin. And everybody was talking about this crash with Bitcoin the other day. Oh my God, it's tanking and this and that. But if you look at Bitcoin real quick, we retested this downward trend here, and we're starting to stabilize right there, right around where I said we would, which would be right there about $30,000. Okay, I think we found a bottom on Bitcoin, and I think what we're going to do is just kind of trace, follow this weekly support back up. We'll break through this resistance here, probably like sometime February 3rd, February 4th. And then it's back up on Bitcoin as well because, like I said, if you go back and watch some of my other videos, and it's not just me saying this. This is like expert analysts saying this as well. There's a big wall of money coming in to buy up Bitcoin when it drops like this, And guys, the big boys are buying at 30,000. You think they know something we don't? I mean, that just tells me prices are going much, much higher. So I would expect Bitcoin to turn around. We'll probably get another leg running up here sometime in February. I would say like middle of February, end of February, and then from there it's the second leg of the bull run that we're in. But watch Ethereum, okay? Because Ethereum, I'm really focused in on Ethereum now. Very, very bullish on it. And with that said, guys, that's all I have for today's video. If you haven't subscribed to the channel, go ahead and please do so. And remember, fear nothing, my friends, okay? Till next time, I'll talk to you later.